In this video, I'm going to be explaining to you the exchange rate diagrams. Simply. Firstly, we need to look at the market equilibrium. As there is a limit to most currencies, they are all subject to the demand and supply mechanics. For my example here is a demand and supply diagram for the market for euros. And when people buy a lot of the currency, demand shifts from D Euro 1 to D Euro 2. Or when people decide to sell the euro, supply will shift from S Euro 1 to S Euro 2. Now moving on to the currency pairs. As the forex, which is the foreign exchange, involves two currencies, both are interdependent of each other, and the market consists of buyers and sellers of these currencies. Say hypothetically, the US increases its demand for holidays in Europe by 25%. What they need to do is to supply their US dollar and demand euros. So what happens first is that they need to supply US dollars into the foreign exchange market. As a result of this, the quantity of US dollars will increase, as the price of it will depreciate from P1 to P2. And as they are supplying their US dollars into the foreign exchange market, they are actually buying euros. So the demand for euros go from D Euro 1 to D Euro 2. And the result of this is the quantity of euros increase from Q1 to Q2, and the euro appreciates from P1 to P2. Managed exchange rates. A managed exchange rate is managed by a central bank which keeps the rate within a certain range. This is also known as a crawling peg or a dirty float, and there is an upper band and lower band. In my example here, the upper band is 3% and the lower band is minus 3%. So if the exchange rate goes above any certain range, the central bank will have to intervene. Say for instance, there was a large demand for euros from D Euro 1 to D Euro 2. This causes the exchange rates to increase from ER1 to ER2 and Q1 to Q2. As you can see, the exchange rate is quite close to our upper band. In this case, the central bank will start buying foreign currencies using their euros. So in turn, the supply of euros will increase from S Euro 1 to S Euro 2. This devalues the euro from ER2 to ER1. And now the euro is back to where it originally was. I hope that helped. I hope you guys have a good day. Bye-bye.